Hi, everybody. Welcome to Ladies Power Lunch. Thank you so much for joining us. Today, we're talking about something that if you're a woman in business or if you're a man in business, you might have great interest in. Here's the deal, guys. I just checked the calendar and it has come to my attention that we only have 21 more days for 2021 to be over and for us to welcome in 2022. That means a lot of things for all of us, but one of the things that it means is that there are some last minute things that we could be doing to make sure that we're in the best possible position for our taxes for the next tax paying season. And so I thought it was a perfect time to invite our dear friend to the show, Jonathan, tax expert extraordinaire, to join us and just give us the really basic facts that we need to know to make sure that we're doing the very best that we can for our businesses as we go into the next tax season. So welcome, Jonathan. Thanks for joining us. But before I invite you to introduce yourself, I want to just say who is here with us in the room. And Barb, I see you looking around. I think it's you. Hey, Barb, can you share with everybody who you are and what it is that you do?
Hey there, friends. I'm Barb Pritchard, CEO of Infinity Brand Design. I'm over here in Funky Town, Texas. It's just Fort Worth, but it sounds so much cooler. And I am a brand web book cover and sales page designer for spiritual entrepreneurs.
Awesome. And of course, you know, Barb is our business bestie with Ladies Power Lunch. And so all the Ladies Power Lunch sales pages and a lot of the graphics and two of our recent book covers have been designed by the phenomenal Barb. So if you do have an interest in having conversation with her, please do feel free to reach out. So, dearest Jonathan, welcome.
Wait, hello.
Most of our members by now know who you are, but there might be a few who somehow missed the party. So, can you please share with us, Jonathan, who are you? And tell us a little bit about the wonderful things that you're doing in the world.
Yeah, so who am I? So yes, so for those that do not know me, or maybe you do know me already, I'm actually reclaiming an entire new brand, which is simply this. I'm Jonathan Bengel, your business intuitive. I'm an IRS Enrolled Agent. I'm an author, a speaker, and I'm a serial entrepreneur. And what I do really well is I guide heart-centered, compassionate women and a few good men through the darkness of making money or transforming their lives to what I call business financial happiness.
Awesome. I want to invite all of the friends who are watching along with us in our Ladies Power Lunch Facebook group. Please just drop a comment in the chat. Just say hi. Let us know you're there. And at the very end, Jonathan's going to be giving away a very lovely prize for one of you lovely ladies or men. And so if you drop your name or just say hi in the chat, you will be entered to win with us today. Jonathan, everybody wants to know. We only have 21 days left. Is there anything that we should be paying attention to as far as our accounting goes over the next 21 days?
Well, 21 days may not seem like a lot, and it's not a lot. And it's funny. So in the sales conversation, usually this time of the year, I'm always saying, look, I need a decision like right now, because I'm not a pushy sales guy. I'll let you take your time, but it's the IRS that sets the law that basically, well, not them, but they can enforce it for whatever. They basically say, look, the deadline is 12/31, 11:59 p.m. And whatever is occurring in your financial life, these are the last minutes of your decisions that you're going to make. So with 21 days, it's actually very difficult to do a lot of what we call proactive tax planning strategies. And these are going to be things like shifting income, shifting expenses, finding what we call business incentives, like, for example, tax-free income, like contributing to traditionals or the Roths or SEPs or things of that nature. It's going to be things like shifting assets altogether to other people or creating new entities in order to unlock, uncover, and maximize our tax deductions. So unfortunately, if we're going to do massive tax planning savings, like right now, we just did a deal for one of our clients and we're over $70,000 in tax savings. If we're going to do something like that, we have to act really fast. And unfortunately, now is not the time. So with that though, I can share with you a couple of tips that you can do that will help us for the 2021 tax season. So here's what you should know. Number one, we're all freaking self-employed, all right? And there's this little philosophy out there called pay yourself first. Now, if you have taken my course, rapidtaxsavingsformula.com, which by the way is now smallbusinessfinancialhappiness.com. It's been renamed because of what it is. And if you've taken this class, in fact, I've had one of our amazing ladies here in LPL take it. And why is her name escaping my name right now? It's escaping me. Why is it escaping me? Help me out. Well, who took the class? I know someone took that class. Who took the class?
Was it Angel?
Oh, it was Manda. Thank you.
Was Manda?
Who
Okay.
took it. So when she took the class, she learned the importance of the entity structure. And she learned the importance of how we structure things in order to unlock, uncover, and maximize our tax deductions. But where I was going with all this is that there's this model called pay yourself first. And we learn what that actually means in the class. And if we're sole proprietors or single member LLCers, and we define that as somebody who's filing on a Schedule C, also found on your 1040. So I'm throwing out some real complex numbers at you, but these are the forms and these are the schedules that we learn about. So essentially what happens is we learn about paying ourselves first. If you're a sole proprietor or single member, you cannot pay yourself through a legal paycheck, like a W-2 check. That is an absolute no-no. And in fact, I've met plenty of people right now who went and applied for PPP loans and then try to issue themselves paychecks. That is an illegal move and is not allowed under the statutes. So instead, we have to think about two other ways in which we pay ourselves. And I do go into details in my class for that. But here's an important thing to know. Pay yourself first. It doesn't have to be a paycheck. It can also be something at the year end that we do, which by the way, I don't do this. I work with other party administrators to do it, which is to contribute to your future. So we're talking about retirement, which is kind of bizarre that I'm someone who likes to work right now today to cut my taxes, but yet I'm talking about taxes for tomorrow. And so when you're self-employed, you get this thing called, you can contribute to something called a self-employment pension plan, a SEP, it's called a SEP. And the way it works is you can take up to 25% of your net profit on your Schedule C, or a maximum, I think it's $57,000, right? Which means you have to have gross, you have to have netted over $200,000 in your profit and loss on your Schedule C. And if that's you, we need to talk because Uncle Sam loves to charge you a premium for that way of doing business. I'm just saying. But for the other reasons, for a lot of us though, let's say, we make like 10 grand or 20 grand even in net profit, and that's what's reflected on the Schedule C. We can actually contribute to a self-employment pension plan. And what that does is that it allows us two things. One is that we get to reduce our taxable income by the contribution amount. And at the same time, we get to put it into a retirement fund that will then, when we turn 59 and a half, theoretically, we can take out the money and be subjected, of course, to tax. So this is like what we call a SEP. This is the pay yourself first idea. So that's one thing you can do as a business owner. Here's another fun thing. You don't have to fund it until April 15th. So you actually have time to fund it. So you can calculate the amount that you're going to contribute, and then you can scrap the resources to get it, to pay for it and fund it by April 15th. So that's something you can consider, is contributing to a SEP. Other last minute things you can do. Well, in accounting, we use words like accrual and cash basis. And so I'm going to give us a crash course in accounting. Are you guys ready for this? So
Oh
suit up,
boy.
put on your seatbelts, and get ready, girls, because our wigs are going to fly back. Whoosh! Are you ready? Here it goes. When we're talking accounting, and this is impacts our taxes, we have these two terms we use called accrual and cash basis. Cash basis is what all of us file by default, meaning the government says if nobody elects to be treated as an accrual method of accounting for tax purposes, then we're going to treat you as a cash basis person. Now, why is this important? Cash basis says this. It says that you recognize the income, the profit, the money coming in, the revenue, when you receive it or you are construed to have received it. Meaning, for those of you that are smart little cats out there, I know who you are. You basically go, I'll get the check from the customer and I'll put it in my dresser drawer, and then I'll deposit it in the checking account in the new year. And then that's when I'll count the income. Wrong, can't do that. The government says the mere fact that you received the check and it's in your drawer, that's income to you on a cash basis, okay? So what we can do is we can in fact go, all right, then, well, maybe I'll delay asking for payment from my clients if I know it's going to impact my income in 21. That's a risk you're going to take, all right? Just saying, you can delay receiving payment. Now, it's also true when you pay your expenses. So Uncle Sam says you recognize the expense when you have paid it, meaning you paid the cash or a check or a credit card, and you recognize it, or you are construed to have done that. Now, that's a harder argument because theoretically the other person may not cash it until January, which means it doesn't show up on your books until January. So that one's a harder one, okay? So here's how we deal with this. If you are not an accrual method of accounting, which by the way, you cannot be off fickle, okay? 1 minute you can't be in the mood and the next you cannot be in the mood, okay? That's not how it works. You are gonna simply state it on cash basis by default, the very first time you opened your business and you filed your tax return, or your accrual. That's the decisions you made at that time when you started your business. Now, Uncle Sam will let you change from cash to accrual method, but there are a whole bunch of tax consequences that come out of that and a whole bunch of accounting things that have to happen in order to make that happen. Now, with that being said, why is this important? For you that are cash basis accounting right now, this is what you're going to do. You know, you've got some costs coming up next month, don't you? You got to pay for my services. You got to pay for Barb's services. You got to pay Dr. Padilla for her services, right? You got to pay other people for next month's services, right? And if you have the cash or you have the credit card on the credit or the credit on the credit card, you can call them all up. I would love to take your money today. I'm not going to say no to you. So you can call us all up and you can be like, yo, so I want to prepay for my tax prep this year, or I'd like to prepay for my consulting this year, or I'd like to prepay for ... Does that make sense? And so now you have an accelerated expense that you can count against your income. Does that make sense?
Perfect sense.
So that's how cash basis of accounting works. Accrual is different. Accrual has a lot of power, by the way. And it's also really powerful in our businesses because accrual is about your future. It's about where you're going. And by the way, quick tip, the future only needs to be as far as getting to the bathroom to use it, okay? So with that being said, all right, we need accrual for a little bit of the future. So the accrual says that we recognize the income when we hit the invoice button and we send it out to the person to pay us. Whether they pay us is irrelevant. The government says, oh, you're going to pay taxes on that, whether or not you receive the cash. All right. So that's accrual. Now, same thing with the bills, right? Your expenses. So let's say that, Barb sends me a bill and Dr. Davia sends me a bill. And in my system, which you all should be using at least like QuickBooks Online, at least. And so you would then be recording the bill in advance of you sending the check. And so now I'm able to recognize that bill as an expense without having to send out the money. Ooh, because in the prior example, you have to send the money with the payment, right? In order to document it. This one, I just got to receive the bill and I don't have to send the money yet. Food for thought.
Interesting.
Okay, so what are your thoughts, ladies? Share with me. What are your thoughts?
Well, I know that I've done this before where coming up on the end of the year, we buy a piece of equipment for the office, or coming up on the end of the year, we buy new computers. Coming up on the end of the year, we make a big investment so that we don't have cash sitting around that is going to be taxed in that way. And so I totally get what you're saying, but I did not know that we had the opportunity, to be honest. I didn't know we had the opportunity to pay our taxes using that accrual method. Had no idea. So this is very, very enlightening for me. How about you,
Yes,
Barb?
and
Anything that showed up for you that was not already in your knowledge bank?
I'm kind of with you on this. Like I didn't I knew somewhat. I'm such a newbie when it comes to taxes. My husband does them for me. In fact, we are Jonathan, we're coming to you soon, my dear. Um I actually knew like of accrual in a sort of a different way. Like if I buy a new computer, for example, the accrual type of well, not necessarily you'll correct me, Jonathan, I know. But basically stretching out the expense of that over a few years versus just claiming it all in once. So that's I think the extent of my accrual knowledge. So this is just, I'm a sponge right now. Teach me.
well, then let me help to not correct the record per se, because you were close. And it would help, it probably would help to know, for you to know that you're one of many who think like this. So just so you know, right? We're not alone. We're all on the same boat, going on the same journey, right? So what you're talking about is another word that, shameless plug, you can find in my book, The ABCs to Deductions, an Entrepreneur's Guide to Tax Write-Offs. And if I was to open up this book, and those of you that have a copy of it, you would find under the word D for depreciation. And that's what Barbara is talking about. And it's this idea that when you buy an asset, something I can put my ass on, right? So an asset, right? So when I buy an asset like a computer, theoretically, now this is before the laws have changed, by the way, they've changed so much. But just so you know, pre-changes like the Tax Cuts Jobs Creation Act, the Emergency Rescue Plan, the COVID relief tax laws, all this other fun stuff, you had to depreciate your assets over a period of time as predefined by the government. And so you would get a little chunk of that write-off each and every single year. Now, I believe it starts in 2018 with the Tax Cuts Jobs Creation Act that Trump put into place. And that is, we are now allowed to accelerate the depreciation, full value, 100%, metal to the pedal, babies, boom. And now I get to depreciate the asset like that, right? Unless it's real estate, but I digress. And so the problem with that methodology, though, all right, is that when you go to sell the asset, because you will, all right, or you scrap it, when you go to sell it, primarily what happens. When you go to sell this asset, Uncle Sam's gonna come back, Barbara, and he's gonna be like, so Barb, check this out. All this time I've been taking a little piece, but I forgot to tell you, I've been charging you rent, but you didn't know about it. And when you go to sell it, I'm gonna give you back all those parts I've been taking, and I'm gonna charge you what we call recaptured depreciation. And I'm gonna subject you to a special capital gains tax for holding on to that depreciation. Oh shit, right? So we have to be very strategic then about when you sell your assets. And this message is going to be really for those of you out there that have rental properties or you're in commercial real estate properties. This is the same idea. He's going to charge you rent for holding on to your depreciation, and then he's going to want you to pay back him for holding on to that depreciation. So with that being said, some other things you can do, like I said, is prepay everything, right? If you're cash-based accounting, right? Prepay everything if you want to. Maybe hold back on receiving payments from people. I don't know. The other thing that you can do is, I talked about retirement. So you can start contributing to your retirement accounts. And, I don't highly recommend this without planning with someone like me as a tax strategist. And that is that we can actually retroactively convert your tax structure from that of a single member LLC into a different entity. And I'm thinking S Corp or C Corp or even partnership if I have people working with me. So this is another way in which we can mitigate the taxes. Now, here's the one problem with those of us, though, that have heard this from people like me, okay? Because I get this all the time. I started a new S Corp. I started a new C Corp. And if you talk to Amanda, she'll remember that we talked about why that's a dangerous move. And when you should make that move, and we talked about that in the Small Business Financial Happiness Blueprint course, is we talk about when you move into these new entity structures. So we could do that last minute planning if you really want to, and it makes financial sense to restructure you. We can go back in time and do that. But here's the thing, right? No one's talking about this. When you do that, and you choose to become a C or an S Corp, by law now, starting in 2017 with the court case in which the defendants lost against the courts, they basically now require us to pay something called minimum compensation, required minimum compensation, meaning that if you're taking out distributions, Amanda remembers what that is, the return of profits first. If you are taking out distributions in excess and you have no wages, or better yet, you have a loss on the books, you could be opening up yourself to a whole bunch of worms. Capital gains tax potentially, ordinary income tax potentially, back tax problems like trust fund issues like payroll tax, FICA, Social Security, Medicare, state withholdings, federal withholdings. So it's a very dangerous move without first talking to an expert like myself. And like Dr. Davia said, one of you amazing women is going to win this opportunity at the end of today's call.
Awesome. So that's a lot to take in, and also a lot of great information. And I think that we have some really solid things that we can work on going towards the end of the year, and also things that we can start thinking about as we go into 2022 and planning for our next year to make sure that we get to hold on to more of the money that we make. Jonathan, how do people reach out to you? Because I know people are getting a lot of information, but they're also having a lot of questions. How can they reach you?
They can reach me by simply going to jonathanbengel.com. That's a great spot to kind of see what I'm all about. If you want to reach out to me, you just send me an email, happiness@jonathanbengel.com. That's a great way just to say hello to me as well. You can find me here on Facebook, Jonathan Bengel as well. Find me on Instagram. You can find me on TikTok. So, I don't do a whole lot there, by the way, just, I think it's an age thing, I don't know. But my whole thing is that I'm everywhere. And if you want, you can just shoot me an email and just say, hey, I saw you here on LPL, and I'd like to be part of your world. Which, speaking of which, Dr. Davia, I actually do have a gift for everybody who watches today's episode.
That is so kind of you. Can you please share with us what your free gift is?
Yes. So I'm going to drop a link, and y'all are going to go, and you're going to ask for, we're gifting. So Jonathan Bengel, which is my other business, by the way, I'm a father of three. So I have three businesses, right? So I have a 19-year-old, that's JB Financial, who's not making a presence here logo-wise, but he's my tax preparation business. And then I had an unplanned pregnancy now 2.5 years ago for Naked Tax Talk, which is my online show. And then, of course, my toddler, Jonathan Bengel. And Jonathan Bengel is the business intuitive side of my business, where I really help to guide you through those nightmares, through that darkness, through the fear of just kicking ass. So with that all being said, JB Financial is actually sponsoring and is giving away 20% discount to all of you who watch today. You get 20% off of our tax preparation services. And so just so you know what tax prep is not. So it is not tax advisory. So meaning you can't come here and have a conversation with me and say, I'm thinking about starting a business, or how do I cut my taxes, or how do I do all that? It's strictly preparing the taxes based on the information that you've provided for us. Don't get me wrong. I'll give you some templates, I'll give you some spreadsheets, things like that to help you maximize it, but I can't advise you. That's a whole other engagement. But 20% off tax prep services. So like Barb mentioned, her husband does it. Maybe she's like, well, let's try Jonathan out, see how it goes, right? Boom, bada bang, we'll apply that. So you'll sign up, and then I'll give you your code that you're going to use to apply the 20% against your prep fees. That'll be everybody that watches them.
I think that's just such a generous gift, and I really do appreciate you including everyone who's joined us here today. Jonathan, any final words for us for just making sure that we do the very best that we can to honor the money that comes into our lives?
Yes, actually, again, shameless plug. Quite honestly, if you go get my book, The ABCs of Deductions, An Entrepreneur's Guide to Tax Laws, you'll find some added benefits here in the sense of like, maybe you've not thought about certain deductions. By the way, I got to edit this book. I forgot to put T for travel. That's a big one in our industry for what we do, right? Is being healers and other entrepreneurs and speakers and coaches. And I forgot to mention that in the book. So let me just quickly tell you what I mean by this. So travel is very important. When you are a single member LLC or you are the shareholder of your C or S corporation, or even you're a partner in a partnership, you are required to maintain these things called minutes. Now, it's a legal term, but it also impacts your taxes in the event that you get audited. So minutes is this thing where we kind of jot down all of our notes, right? Like, what was the agenda? We're talking about our prices next year, our goals next year, our vision next year, or whatever, how much we're going to pay each other, whatever, right? Now, I tell this to my students in Rapid, Small Business Financial Happiness Blueprint. And that is I say to them, look, when we go to have a board meeting, do you have to do it in your backyard? No, right? You don't. So if you want to host your retreat for your shareholders, or for you as your member, by the way, if you're single, you're LLC, we call you members, you can have a members meeting that does not have to occur in your backyard. So for example, if you're like me, we're flying to Hawaii next week for Christmas. And guess who's going to be there? The members of my businesses. And we're having a conversation about next year, what the goals are going to be, how much we're going to start charging people. By the way, fun fact, inflation went up 6.8% in the month of November. It's projected to continue to climb. My question for you is, are you adjusting your prices to adjust for inflation? So just something to think about, right? Just something to think about. We're small business owners here now. Like, our job is to make money. And if we're not adjusting our rates to account for inflation, we're shooting ourselves in the foot. Just a little FYI. So that's how you justify it. Those of us who are scaredy cats to raise our rates, blame it on inflation. It's an easy calculation. Take your current hourly rate or your current engagement rate, multiply it by 8%, because you're going to have to hedge against 2 extra points for inflation. That's your new rate. Set it, own it, and never forget that people who don't want to pay you, it's okay. They're just not meant to be in your world. And the people, babies, who want to be in your world will be more than happy to give whatever you want to help bring happiness to their lives. And that's why we're in business, babies. Let's never forget that. So with that being said, travel. So you can go somewhere and have your corporate meeting or your members meeting. And you can take the airplane there, which is going to become a business related expense on your books. You're going to prepay it now, right? That was my tip. You're also going to book the hotel rooms, aren't you? That's also going to get paid on your business credit card or out of your business bank account, right? Or you're also going to pay for the meals when you're there. You're going to pay for the liquor. I don't know about you guys, but I do enjoy my wine. I do enjoy some of my beers. Like, I'm going to put that on the tab, right? So I'm going to go out there and I'm going to have a board meeting with myself. And I'm going to write all the notes down on a piece of paper. We're going to call those minutes. Now let's talk about another thing though real fast. Hogs get slaughtered and pigs get fed. Now I want you to think about that. Hogs get slaughtered and pigs get fed. Barbara, what do I mean by that?
What do you mean by that?
Dr. DeVille, what do you think I mean by that?
No clue.
Teach us.
I will. So hogs, all right, they're the ones who get slaughtered because they take everything when they know they shouldn't be. All right. Pigs, they take it all the way up to the line before they go to the slaughterhouse. They don't quite go all the way, all right? They become the potbelly pig that we all have as pets, right? So here's the thing, right? Travel. I just talked about it. Go somewhere. Have a meeting with yourself, right? I just shared with you, I'm going to Hawaii. We're going to spend 4 days there with my husband and my boyfriend. Yes, both. And we're going to have a gay old time for the next week, right? Have a fun time in Hawaii. One day, though, I'm going to have a purposefully business meeting with myself. I will call a meeting of the board. That's me. I'm included in this. And I'm going to have my agenda. It's already laid out what we're going to talk about. I just told you next year's goals, next year's rates, what events we're going to attend, what stages we're going to be speaking on. Like I'm coming up with my plan. You see, that's how I'm closing out 21. Now, the hog move, I deduct all 3 tickets, all hotel rooms, all the food, all the booze, all the rental cars, which is astronomical, by the way, in Hawaii. It's crazy. Like all of that, if I deduct all of that through my business, that's a hog move, right? But if I take a percentage of that amount, then that's the pig move. So what I mean by this, 4 days, it's math. Here we go. Gotta put our math caps on. 4 days, all right, I'm going to spend in Hawaii. One of those days, I'm going to have a business meeting and I'm going to treat it like such, as I just said to you, right? What I do is I divide the total cost by, I multiply the total cost by the percentage. So what I'm doing is I'm taking 1 out of 4 days, that's 1/4, right? And I'm going to multiply that against the total cost of the workcation. And that's going to become the amount that I'm going to deduct on my business taxes. Does that make sense? Boom.
Awesome. Oh my goodness. I have chills just hearing all of this. Jonathan, we're going to have you come on back on the show to talk even more. But of course, guys, you can catch Jonathan's wisdom over on his show, Naked Tax Talk, right here on YouTube. And you can also, I have mine on my Kindle. You can also get his book, which is really, really, it really gives us the basics that we need as entrepreneurs to get started. And for anybody who has not taken his course as yet, I really do invite you to go ahead and take it because it really is eye opening for all of us as business owners. Barb, thanks for hopping on the call. Everybody who joined us over in our Ladies Power Lunch Facebook group, thank you so much for being a part of the show today. Jonathan, as always, just such a pleasure talking to you. It's amazing how much fun we can have talking about money and talking about accounting, which usually feels like not the most exciting topic. And yet I was completely riveted. So thank you so much for joining us today. Everybody, we'll be back on Monday because Monday is our monthly Ladies Power Lunch networking meeting. We are going to be meeting over in our new home for Ladies Power Lunch, which is in Captive. And so I have put in our Ladies Power Lunch Facebook group right at the top in the announcements exactly how you'll join. And you'll just click on that link. If you haven't already registered to use Captive, just register and it'll take you right into the platform, sort of the same way that you would for a Zoom call or anything like that. So it's really easy to use, but what it does is it gives us the opportunity to have a place all of our own off of social media. It also gives us an opportunity to set up our profiles so that when somebody is out there looking for another Ladies Power Lunch member is looking for the service that you provide, they can just log in to our Encaptive site and check out to see who all is here, what they do, what they offer, and how they can connect with you. So be sure to be a part of our meeting on Monday, 12:30 to 2 Eastern Time, and we'll be doing some planning for 2022. I'll see you guys on the next show. Take care, everybody. Bye.